So, very good afternoon, everybody. So, let me just briefly talk about our new NFO, which we have just opened on January 5th of 2024. Okay. So, so I'm going to talk about a consumption fund, but just before that, we also want to share with everybody. Yesterday, we have crossed 50,000 crores of money under management. And what is very important for us is that we have now nearly 50 lakhs folios. So it's a very large retail support which we got from all of you. So we are really thankful for that. So let's come back to the a consumption theme. Okay. If you recollect right from April onwards, we have tried to showcase why we are launching a thematic fund, and particularly from June to September, we talked about that India risk appetite will gather momentum and it should bottom out somewhere by end of March. And if you can time the thematic fund properly, then you can make extraordinary return. This is something which we have tried to demonstrate. Okay, the thesis why we are launching a thematic funds and why it makes sense to build it now. And this is, let's look at just the performance aspect. Okay, so first we launch our DAF related fund, and you look at what sort of performance it has given. If you look at last 6 months, 22%. If you look at the business cycle last 6 months, 36%. Okay, since inception, 76%. So this is the numbers. If you look at, even let's focus on 6 months perspective, also BFSI 32%, and look at the gaps with the industry benchmark versus the benchmark return what we have delivered. So it clearly indicates that we as a house, Quant strongly believes in market timing, and when we market timing is through cycle analytics, is through inflection points. And it makes sense when we talk about how we launch a consumption fund or manufacturing thesis, and all of the funds has done extremely well in last 6 to 8 months time when we launched these products. So let's go back on the consumption fund. Okay, the real thesis of the consumption is all about that. If you have seen that post COVID, what exactly happened, the lot of habits got changed, we shifted towards digital as a segment. Then we also talked about how rural economy got affected big time. It was urban and rural both got affected in terms of consumption for nearly 1.5 years. If you really look at, except few categories, most of the categories was affected. And now you see how uh, urban has come back. And we believe that consumption cycle is again looking good after 2 years or 2.5 years of correction and
Sandeep, you are not
consolidation.
audible. Sandeep, you were not audible for a few seconds. Maybe,
Okay,
you can.
okay. So I'm saying that post COVID, lot of habits got changed. Is better now?
Yeah, it's better now. Yes.
Okay, perfect. Anurag. Okay. So we are talking about how post-COVID habits got changed in the system. Okay. And we have seen how the consumption was badly affected for last 2.5 years, except few segments which have done extremely well based on the requirement of that segment. But overall, the consumption was relatively weak. We strongly believe that the cycle is coming back. And one of the key reason why we launch a cycle fund, because we believe that 2024 important segment which will pick up will be the consumption cycle. So consumption theme is a apt time for launching this product. And this product, we are not looking from 1 year's perspective or 2 years perspective, because if you look at the growth which we are visualizing for the current decade for India and how we are looking at even by 2047. So this is a long-term trend which we are spotting. How is that? It's not the consumption is like we used to call it evergreen. Now we are not looking at just FMCG companies. Earlier, only FMCG companies used to be quantified as a larger thesis or the evergreen thesis. But here I'm talking about slightly more broader concept of consumption as a whole, which includes couple of other industry which I'm going to talk about. Anything related to consumption, if India is going to do extremely well going forward, I think consumption cycle is coming back, and I think it's coming back with a bang. And this is one of the reason a lot of people have asked this question in the past, that Quant mutual fund as a house right from September 2020-21 have moved towards value. And this question comes whether we are shifting back to growth. Yes, valuation of some of the consumption names are still rich. I will not say expensive. Yes, they are rich as compared to other segment, and they will remain at elevated levels. And we are not very hesitant to participate. Okay, in a growth stories also. Yes, we agree this decade belongs to value thesis, but within that decade also you will get opportunity for growth to come back, and particularly growth related to consumption stocks, the consumption cycle, we are very, very optimistic about it. And if you have seen in last 1 month in our portfolio, some of the consumption name suddenly weightage has increased from hardly anything to 3%, 4% sort of thing. So that's a change which you have already seen in the previous one portfolio. And going forward, I expect the weightage for the consumption stocks in our portfolio overall will move up. And this is one of the precise reason why we are looking at what do you call it, launching a thematic fund or consumption fund at this stage, because we are very optimistic about the cycle. Let's go back. Okay. Okay. So we have tried to showcase, how with the help of e-commerce or the digital thing we're talking about, or through mobile everything, I don't think most of people now go to the shopping malls up to that extent. The way habits have changed, we're just trying to check in how the technology is driving the even the consumption space also. Okay. This is a brief thing which we have tried to explain why consumption as a cycle makes sense for us. And when we talk about timing is the key, but I always just want to report timing is not about trading in any manner. Timing is a risk mitigation tool. In our VLRT framework, when we talk about valuation analytics or liquidity analytics or risk appetite analytics, then we talks about timing. So timing is a function of all these three analytics, and which in turn can be function of multiple subset or multiple analytics if you talk about. So timing is a risk mitigation tool. If you really look at, we launch our pharma fund, and when we talk about that, the first quarter of 2024, the cycle has bottomed out. And you look at the way pharma sector had delivered extraordinary return, and though it's not only about just we launch a pharma fund, we also went overweight also on the pharma as a healthcare as a sector in most of the other schemes. And that's the reason it makes a lot of sense sometime to time the cycle right. And if you can time it, actually you're reducing the risk from the longer term perspective, and generating alpha out of it. So this is something which I just want to reiterate, why timing is so important when we launch a thematic fund. Now, consumption, if you really look at, it's like we are trying to look at and understand from a behavior perspective. As you all know, Quant is largely a behavior house. We do a lot of behavior analytics and then try to incorporate these behavior trends more along with our fundamental data points, along with our quant models. Okay. So, what is very important for us to understand the combination, and here we're talking about human side. Okay, how this behavior trends are changing the consumption needs. Okay, so we are linking the entire growth not pure from the consumption needs perspective. This is the how mindset is changing, how post covid that mindset has changed completely. And that is something which we are trying to capture through this thesis, and very important for us to understand from a behavior perspective rather than just looking from the demand supply perspective. Okay. So I'm just briefly covering, this is a point which I talked about, how post COVID the entire landscape has changed. We have seen supply disruption, we have seen consumer shift, how technology and data disruption has played a role. Okay, how the regulation also has improved a lot for this space. So I think there are dramatic changes happening for this space, and I we remain very constructive going forward for this segment. Okay. Now, this is some of the layers we try to showcase, how it gets built up, like what are the key drivers for consumer behavior. I'm not trying to get into very specific things, but I'm just trying to give you perspective that how behavior data points which we are trying to capture, and this entire thesis of the consumption fund is about we are trying to capture the changing consumer behavior. And this is the entire thesis this fund has been revolving around, that we are able to spot those early trends, behavior trends, and we try to capitalize on that. So, if I have to talk about the changing mindset or strategic partnership or adaptive models, some of the data point we are just trying to showcase, how if you look at the presentations of previous consumption funds, or the way we used to define consumption has gone through a dramatic changes post covid. And this is something we are trying to infer from that, a lot of things have changed. Okay, now if you really look at from a larger thesis, when we talk about India growth story, okay, India could be the biggest growth story in the world, not only this decade, maybe half century belongs to India. This is what so obviously it is all about India's population, which people used to criticize in the past, that population, and particularly younger population, which you are talking about, will be the biggest source of this consumption thesis, which we are trying to educate and try to build a thesis going forward. How consumption story will come back India and will only gather momentum from the current level. It was suppressed for a while for a various reasons. Some extraordinary event happened. Okay, so these are the some of the data points which we are trying to see how a consumption indicators are indicating. Look at, it's not about just FMCG, it's about passenger vehicles, it's about two wheelers, about the EVs, it's about the travel and leisures. You talk about credit card transaction or the e-commerce related transaction, which is changing. So whole consumption indicators have changed completely how you measure. So some of these high frequency indicator we are trying to showcase and look at the growth which we have seen in these indicators. Okay, this is also we talking about, look at the trend relative to India, how it is changing, how the UPI or the digital aspect or the domestic air traffic. Okay, lot many data points. I'm not getting into very specific because we have showcase in the presentation. One can look into it. Okay, now let's talk about the. Since we talked about in the beginning, we are not talking about launching a FMCG fund. If you really look at and understand Quant philosophy of thematic funds, when we launch a thematic fund, yes, thematic fund means we are talking about concentrated approach towards one sector, but we also try to keep as broad as possible. So instead of calling FMCG, we're talking consumption fund, which includes your travel and tourism. It includes textile. It talks about telecom, media, construction, automobile, healthcare, IT segment. You know, you look at the media space. So lot of thing, anything, and maybe much more. Okay, this what we talking about the larger sectors. So we are what we are talking about beyond FMCG. This is a whole consumption thesis which is changed in last many years and will gather momentum. So if you really look at from the positioning of the fund and the strategy, in a thematic fund, the whole idea for Quant as a mutual fund is all about a thematic fund or focus fund. Okay. Yes, it give me, you can call them a flexi focus fund because we get flexibility to across all market caps, mid, large, small, we can optimize. We can also talk about when we say concentration with confines to limited thing. So here we are also talking about, we are not talking about diversified portfolio. We are very deliberately saying is yes, risk factor will always remain high for thematic, but if you time it better, it delivers better returns also. So we are talking about pure 6 to 8 consumption themes, which will be part of this thesis, and maybe focus will remain only largely on 3 to 4 emerging themes. So those are area which we are trying to optimize. And again, 80% of money will invested in these themes, and 20% we have flexibility for any diversification if need be. And I'm using the word if need be. If we believe the consumption thesis, we can have option to deploy it up to 100% in the consumption theme, then we will not hesitate because that's a cycle. We are in the early stages of cycle. We are the cusp of that inflection point where our predictive analytics are endorsing this up move can happen. So this is the way we are defining a very, very concentrated approach. We are talking about 6 8 consumption themes. Within that, we again, I'm repeating 3 to 4 focused approach we try to play. Yes, flexibility remain high. Diversification through sector rotation. Okay. Diversification to stock rotation rather than saying diversification does not leads to a massive number of stocks which we need. So we will play our own uh, thesis of VLRT framework, which we have been using for a while, and how dynamic style of money management we have seen it has demonstrated in last many years. Okay, so these are the broader thesis which we want to talk about. Our investment thesis, broader thesis remain the same. How we look at the global macro, come to Indian macro, then we try to assess the risk on, risk off, then we try to understand from a money flow analytics how exactly is changing, and then we implement VLRT framework on the companies, and we try to get a smaller portfolio, and then we try to implement the data points so that we can time it slightly better. So again, from a very macro to micro approach which we have been using, that same thesis continue for this fund also. As we talked about, we use multi-dimensional research, so more from a behavior house, how multi-asset, multi-managers concept, multivariance model, all leads to, we say, analysis adds up. Okay, so this is the small brief background from our presentation perspective. And issue is already opened and it is going to close on 18th. We'll look forward from your support. I'm now opening the floor for question answer. I've kept it brief and we will be covering our market outlook also sometime next week or so, where we're going to talk about the entire 2024, how we look at those market in terms of sector allocation and global perspective. We'll have a separate call will be dedicated for the market outlook, maybe from 2024 perspective, which we'll do very shortly. So I'm opening the floor for question answers. Anupam?
Yeah, thanks, Sandeep. I'm just waiting for more questions, so not many questions at the moment. There is a one question from Rambo that instead of choosing any of the thematic funds, it's okay that if we choose a business cycle fund. So, what is your views on that, and how it would be different in that case?
So, see, I agree with you because that is the mother of all fund. That's our business cycle funds. We try to capture that. Okay. But we have to also understand is if your needs are fulfilled through that, and it's a great thing idea. Definitely one should do that. But there are certain types of investor also, okay, who are looking for very, very thematic approach. Okay. They like, I know a lot of friends when we were in Bangalore, they forced us to say, no, you should launch a dedicated technology fund. We like your style of money management, but we are only tech related companies. We only invest in tech companies, so we will like to. Similarly, there are a lot many people who admire and have been a great believer of this consumption India consumption thesis for many years, and they have been one of the biggest beneficiary. But our style of dynamic management, a lot of people, family office have requested, some of the large tickets guys also talked about, we want focus approach. So I think when we offer product, because mutual fund is predominantly a retail centric product, we try to, because a lot of tax efficiency and benefits are there. So when we thought, why don't we offer this product for a masses rather than just looking for one segment? Okay, so that's a thesis. Depending on the individual needs, if you like this thesis of consumption, yes, you can put money. Otherwise, you always have the option to put through business cycle. Okay, so it's a very individualistic choice and individual preferences. Hence, but we are timing it from a more from a trading from a timing perspective, because we believe the consumption cycle is about to pick up. So that's our thesis for that.
Thanks, Sandeep. Another question is, how do you see valuations in the consumption sector? Usually, these sectors are very high PE. In spite of that, do you see value in that?
So it's an interesting point, actually. Let me, as I said in the beginning, we don't believe that they are expensive, but I agree. They are rich and they will remain rich, or their multiple will remain elevated from a longer term perspective. So I will answer this also question from a VLRT framework. See, when let me answer this point. Like a lot of people have raised this point in the market. Let's forget consumption for a few minutes sector. We're talking about market. Everybody has opinion. Market is expensive. It's very, very expensive right now. And then you give example what happened in 2000 or 2018, or what happened in 2000 various 7 8 also. I think what is you're looking at, when you start looking purely on the valuation basis or purely on the valuation analytic, which we call it one dimensional or unidirectional approach. And if you're looking at only one directional, then you don't get all the answers. Okay. Because yes, because in one direction, yes, it look expensive, but you have to look at what background. Okay. 2007, 8 or 2000 or 2018, the valuation was rich, but the liquidity perspective is very different from today. The India liquidity cycle is unfavorable. Cycle has just started. Sentiments data, risk appetite data is still inching up. So the background is very. When you look at purely valuation in isolation, you don't get answer. That's the reason when we talk about multi-dimensional data points, or looking at the combining qualitative and behavior aspect through a VLRT framework, the moment you bring uh, only give one third weighted to the valuation and one third to risk appetite and one third to liquidity, the equation changes completely. Okay, and that's the reason I said in the beginning of the presentation, yes, valuations are rich, but I don't think they have peaked out and it can remain evergreen from a longer term perspective. And that's the reason, if if we ourselves believe their sectors is very expensive, then it doesn't make sense for us to launch this fund. Since we believe predictive analytic data points are showcasing there's much more upside for the India consumption theme, and that's the reason we have launched this product. And despite knowing that one, the valuations has been rich and remain rich for a longer term perspective.
Thanks, Sandeep. I think one question is from Madam R. Mehra, that what is your view on the Z Entertainment given their merger issue? I understand we cannot take this question, but second is, are you covering media sector within the consumption NF4 as a offering?
So as I explained by Anupam, yes, from a compliance perspective, generally don't comment on the individual companies or stocks. I have said on various forums, including on the monthly calls in the past last 6 8 months, that we have been very constructive on the media. We believe media as a sector has uh, bottomed out long back, and they are in the neglected. They were in the most hated zone for a while, and still remain despite some rally which we have seen in the sector very recently. And we remain very constructive for this space from a longer term perspective, both from medium and longer term perspective. From a portfolio, if you've noticed last month portfolio, we have reasonably large exposure of media stock to Sun TV, and we have a very large exposure to TV18, Network 18. These are the three names which we have a very large exposure in our portfolio. Okay, depending on the mid or small, which schemes we are looking at. So we have decent exposure, and we remain constructive as a media, and media is also part of the consumption theme.
Thanks, Sandeep. The next question is from Akshay Vadera, that would railway and construction related companies be part of this fund?
So some companies, like example, I'm just giving example like IRCTC, which is the ticketing and the catering, that can be part of this thesis. But if you look at the railway infrastructure, companies will not be qualified for that. So some company, maybe I will not say all the company, maybe few companies within railway can qualify, but not all the companies. So basically, largely the finance company or the infrastructure companies will not be part of the consumption theme. Uh, However, it's a very debatable subject that financial should be also part of consumption. Okay, so that's the only area, but definitely infra will not be part of it. So, few options from that perspective.
I think, Sandeep, you have answered for the next question also, but I'm still asking, sir, in this consumption fund going to have exposure across sectors, that is consumption through IT, infra, all sectors. So isn't it a subset of flexi cap fund?
So, Anupam, what I'm saying that I said in the beginning of the presentation, I said that uh, yes, this is a s- focus flexi. I defined in the beginning itself the way we manage thematic fund. It is focus. So it's not only this. Most of the thematic fund at Quant Mutual Fund has been approached like a focus because of a particular sector or segment which you are looking at or themes which you are looking at, and flexi because it gives me flexibility to choose between all the market cap company, whether it's mid, large, or small. So it is focus flexi. Answer is yes, but not just flexi alone. So not a diversified. So our current flexi fund is a diversified flexi fund where this is focused flexi fund.
Thanks, Sandeep. Yeah. So next question is, 2024 is a leap year. Usually market crashes in the leap year. Will there be a major corrections in this year? So I'm taking this question as a leap year.
So I think we will be talking about the entire 2024 thesis in our next presentation. We'll talk about the monthly call which we do. Okay, maybe sometime next week we'll look into it and we'll try to answer that. So let's park this question till then, and we'll address that part. But with,
Okay.
but I can only tell you we are not looking any sort of crash if the question is that,
Yeah. Another question is also not related to the fund, but it was from the commodities fund and how much we are invested in that fund. If you can.
So we have invested nearly 70 to 73% of that fund is invested right now. Okay. So obviously it takes, we have a 45 working days or for the investment of that entire new funds, and that's the way it gets stabilized. So we have nearly 70 to 73% deployed.
Okay. Sandeep, maybe one of few questions. Are you thinking about luxury consumption as a thematic fund? I think income equality will grow and growth in luxury segment will be higher than traditional consumption. What is your views on that?
So as of now, no, we are not looking at, because the only problem would happen if I launch a very luxury centric thing, then it's a very smaller portfolio. In India, luxury related companies are not there the way in Europe or US, the luxury companies are listed and we have restrictions right now to invest abroad. So it doesn't make any sense to launch such product at this point in time. Maybe in future when such category get expanded, and if our predictive analytic model thesis will remain constructive, then we look into it. But as of now, we are not looking at it.
Okay. Next question by Ronak. Can we look for this fund for long term, or we can call it evergreen fund so that we can do SIPs into this fund?
So I said in the beginning, because we talked about that consumption cycle from a longer term perspective looks very good to me. So it's a yes, it's a evergreen product for us, because it's not just FMCG, it's largely consumption related, and consumption can be covered by many thematic ideas which we're going to capture. So yes, you can look for SIP. Yes, you can call it evergreen. Yes, we are very optimistic from a longer term perspective. In the beginning, I think these are the points I have tried to address.
Sandeep, again a question. If you want to take it, that there were talks of launching a fund of fund for the thematic funds. So, do you have any plans to launch it in the near future?
See, ultimately, we will be launching a thematic fund. It leads to that, because what happens sometimes, we do get a lot of requests from retail investors is that one, we should have that category of somewhat fund of fund where you choose depending on your thesis or your approach where we should deploy money, instead of looking at SIP in particular category or particular style or particular thematic fund. So we have, from that perspective, we have definitely have that plans to launch it, but we have not even filed as of now also, but we will doing it due course of time. That's the idea ultimate behind this launching so many thematic fund. One day we'll launch fund of fund also.
Thanks, Sandeep. I have not any more questions on the consumption fund, actually, more on the markets or maybe other funds. So,
Yeah.
as you mentioned, we can take questions in the another call. So, we can conclude this call in case if you have any last words to say for this one.
The only thing I want to request everybody, you have been supporting us on various NFO, okay? I think this NFO is also unique in that sense, because this one NFO which has, if I have to look at from a longer term perspective, consumption theme, which can remain. So this product, yes, you can say the valuations are rich, but I think the way we look at the volatility of this product will be far lower than the other thematic fund which we have launched. So one important observation I can say, given the nature of consumption stock which we have in India, they are relatively more stable, less volatile. Okay, and they are not trading right now at that admired territory. They are neither and neglected, but they are in somewhere in between, and the cycle is looking up. So it could be a good product, a less volatile, and investor from a longer term perspective only put money, but the volatility of this product will be far far lower than the other thematic fund which we have launched. So that's the only background which I want to share with you. Okay, thanks a lot for joining us, and meet you next time on the our yearly outlook call.